Very good afternoon to all. Welcome to Tally CA Connect. I was just seeing many known faces which I could see weekly joining in CA Connect. So, firstly, thank you so much. It's really great to see that you have found these sessions to be useful and you're part of this weekly sessions. So, today our expert is CA Sonal Jain. So as we near to the end of financial year, Sonalji suggested that it would be ideal to discuss the key considerations by closing the books of accounts and how through TallyPrime audit tools and dashboards can be of help. So Sonalji is a practicing CA. She heads indirect taxation in her firm along with specialization in customs and FTP. She's a very active speaker on topics related to these subjects, that is GST, Tally, system implementation, and has taken over 100 sessions at various important forums. So thank you, Sonalji, for doing this today, for making the time for our CA Connect session. I hope it turns out to be very productive and engaging session. So thank you so much for your time. Over to you.
Thank you, Komalji, and thank you, Tally, for such a warm welcome. So, without much wait, I'll start with the session. Welcome, all of you. I think we can start now. So, friends, as the topic suggests, it is about how we can simplify the year-end compliance. So, friends, basically understanding, we all know that Tally has simplified our work to a greater level. But today I will be discovering you few of the features which many of you have never tried, and using them can make your work easier, faster, more accurate, more reliable, and can be very fruitful while giving data to your auditor for your year-end compliance. So, friends, the session covers two aspects. The first aspect is about the I have prepared one sort of checklist which we will be even sharing you at the end of the session. This checklist is about the points which we many times miss at the time of regular monthly work. Like every month we file GSTR 1, we file GSTR 3B. But during monthly compliances, these are the points which we used to miss out. So it is my request to all of you that in the year-end compliance, you mandatory check all these 25 points. And believe me, this 25 points tracker will help you at the time of assessment. Like it is about if you comply in the month of March, it will save you lots of interest penalty, because anything which is discovered at the time of GST audit or GST assessment, it has a huge impact on assessee, because at that time it result into interest penalty. And though today we feel the amount is less, but later on when it comes with interest and penalty, it increased to a greater level. So friends, this 25 points checklist is about how you can make compliance covering all 360-degree angle of business, and how you can put all the points at a handy thing. Like if we forget things, the risk is always on assessee, because at the time of assessment we cannot tell that we have forgotten the things. So friends, let's have a walkthrough first to the Excel checklist, then I will demonstrate few of the points in Tally. We will have a live practical aspect of Tally as well. So friends, I think Excel is visible to all of you.
Yes, it is.
Ah. So friends, see, many a time what happen in the monthly work, or many time it is possible that we have changed our business premises or we have changed the address. So what happened? The section 16 of GST Act, it says that whenever you do any changes in your registration, it is necessary that your invoice should be updated with those address. So what happens? See, I purchase goods from Mr. ABC, and he gives me supply in my X address. Later on in a particular month, I change that address, but that supplier is sending goods on same address. Like though delivery is at new address, but in the invoice the old address is only there. So as per GST rule, as per section 16, my invoice should also have the updated address, and same address should be updated on GST portal. The statutory timeline of updating the address of 15 days. So friends, in during the year, if you have changed any of your GST registration, you have changed any of your director, any of your partner, if you have changed any of your email ID, phone number, bank details, IEC number, then I request you all to check that thing in the year and get the updated before end of the March. This will help you in saving your lots of input credit. Because see, आपके bill में पुराना address है and आप actually working at new premises, the GST officer will disallow all your input credits. So my request to all of you is that take this point as a first point of validation. In case of any of these changes, get it corrected. So this is the first point of your tracker. The second point is that LUT, see, in case if you are an exporter, nowadays many of you, like almost every business is doing exports. So if you are an exporter, it is mandatory for you to take letter of undertaking. Now you will say that question comes that being an exporter, my exports are 100% exempt. It is not taxable. Then what is the point of taking all documentation or like that? So see, what GST law says, it says that in case you want to enjoy the benefit of zero rated export, like if you want to enjoy the benefit of exporting without any taxes, it is mandatory for you to take the letter of undertaking, and that letter of undertaking number should be disclosed on your invoice, on your sales invoice. So friends, my request again here is that, see, in case if you are an exporting, first ensure that whether you are having LUT or not. In case you are not having LUT, apply it immediately. And in case if you are already having LUT, then ensure that on your sales invoice it is written that exported against LUT. And now many of you would be having question that मैंने तो 17-18 में LUT ले लिया था. So friends, ensure that LUT has to be taken on yearly basis. The last year LUT is not relevant for current year. So for 24-25, there has to be separate LUT. And for next financial year, 25-26, in the month of April, you have to again apply for a new LUT. So be careful in that aspect. So there is one question from Mr. Prakash Jasani. Address not updated, then what is the impact on GST ITC? So friend, if you have not updated your address and say your input credit is either on old address or in new address, there are chances that department will disallow the ITC. Because what is the law? Law says that all the input credit invoices should be on the premises in which actually you are sitting. And that premises should actually be updated on GSTN portal. So this thing has to be taken care. If you have missed to change the address, do it immediately. The statutory timeline of changing the address is 15 days. There is one more question of Mr. Rajesh ji. If one has changed his signature in the bank, should it be done on GST portal also? Logically, yes. But see, while taking the GST registration, we are not giving any signature sort of. So that will not have much impact. But what you can do as a authorized signatory, the letter which we are uploading while taking a GST registration, that you can give as a revised letter. Because see, anyhow, in the letter of authority which you gave earlier, your signature would be there. So that you can revise. Okay. Uh, So moving forward, till now we understood 2 points. First is validate all your credentials, validate all your registration. The second point is letter of undertaking. In case of exports, it is mandatory to take letter of undertaking. If you have not taken, take it immediately and ensure that letter of undertaking number or letter of undertaking verdict declaration is there in your sales invoice. Now, third point, which is very crucial, and many of the exporters don't know this point. So, this point is about FIRC and BRC. So, friends, in a very simple term, first I would like to explain you the difference between FIRC and BRC. So, see, whenever I do exports, whenever I do export of services, it is mandatory that there has to be inward forex flow for exports. Like my consideration should mandatorily be in foreign currency. So the proof which suffice that I have received the foreign currency is FIRC, Foreign Inward Remittance Certificate. Now, what law says? Law says that only FIRC doesn't suffice that I have exported the services. Now, for that, I will need a BRC. Now, what is BRC? That is Bank Realization Certificate. So, my bank issues me BRC only when I give all the supporting documents of my exports of services. So friends, in case you are doing exports, to enjoy the benefit of zero rated supply, like to enjoy the benefit of exporting without tax, it is mandatory that you should have two supporting documents for your export, that is FIRC as well as BRC. So in this year end, if for any exports of services, if you are not having these documents, arrange these documents immediately. Otherwise, during assessment, there are chances that officer will ask you to pay GST even on export of services, because the genuineness of export of services only get proved when it is supported by FIRC and BRC. So this is very crucial. Okay. There is one question from Pradeep ji also, to intimate change of address. The current timeline is, sir, 15 days to communicate the change of address. Earlier it was 30 days like initial law, but now it is 15 days. Within 15 days, we need to communicate to department about change of address. So now moving to fourth point of the checklist. Uh, See, whenever you are doing your year-end compliances, I would request you to validate your opening balance. So for your GST opening balance, you need to go with the portal GST and screenshot for last year. So this is say 24-25. So for 24 opening balance, 1st April 2024, you need to take the figures of GST and credit ledger as well as cash ledger from GST and portal as on 31st March 2024. Okay, there is one question. Beach में I can, yes, I can take Hindi words also in
No,
between.
Sonal ji, as this is a pan-India audience and we have not, in the beginning, we
Oh,
have not mentioned that this will be in
done,
Hindi.
no issue, no
Yeah,
issue.
please. Thanks.
Uh, okay. So, friends, about 31st March 2024. See what happened in the tally also, we have a system of reconciliation of credits. So, what happened? Any credit invoice, any input credit invoice in the books of account and in the GSTN, it is not necessary that it would be real time. Many a time it will be there that we have posted in books of accounts, but we have not given effect of same in GSTR 3B or GSTR 1 or like that. So there are chances that there is a difference of input credit in both portal as well as books of account. So what I suggest that for any closing balance reconciliation, you should always have the list of unreconciled transaction. So for current year, for say 24-25, when you are preparing the reconciliation, the first point of checkpoint is that matching the opening balance. So how you will take the opening balance for 1st April 2024, that is the closing of 31st March 2024. So pick that figure and see the reconciliation of last year. From that, you will derive the unreconciled transaction, like the transaction which actually pertained to last year, but effect of same is given in current year. So this is also one work which we need to do in the month of March for a better compliance. Okay, there is one question again from Prakash ji, that is this compulsory to match credit ledger as per books with GST? So yes, Prakash ji, it is very necessary to match it. And in case the figure is not matching, you should have the list of unreconciled transaction. Because see, I have faced more than 50 GST audit and assessments. So whenever there is assessment or audit from department, the first thing they ask is that give me the audit report of last year and give me the ledger of input credit from the portal. So in this ledger and in the audit report, they compulsory match the balances. And for the difference, they compulsory ask to client only that what is the reason of difference. So it is very necessary for us to have this reconciliation. Otherwise, during assessment, for any differences, the department asks us to pay that amount. So there is one more question. March month purchase related to ITC will it be reflected in April, right? So we check on this. Yes, there are chances, Prashantji, that March month purchase is reflecting in April. So for those difference timing differences, it is our duty to keep the list of record. See what happens that today I remember that ye March ka purchase is going in the month of April. But after 2-3 years, when assessment comes, I will not remember the reason of difference. At that time, I have to do entire year reconciliation. So what is my suggestion? What I do, I simply list down all these points in checklist itself. For each client, I prepare this checklist and in the checklist itself I keep the points of reconciliation. Like in the checklist itself, I'll mention the list of transaction that these are the reason of difference between credit as per books and credit as per portal. Okay, there is one question that what to do for unreconciled item. So see, what will happen for unreconciled item? We need to give a justification. Let's see, my balance as per portal is 100 rupees, but balance as per books is 120 rupees. So 20 rupees line items are due to difference, and we need to write that this 20 rupees line item are coming in the month of GSTR 2A in the month of April. So in portal, I have taken in month of April, but in books, I have taken in month of March. So for any transaction which are lying in difference, we have to give the reason and justification that due to this reason, they are not posted in Tally or they are not posted on portal. Okay, there is one question from Payal Ji. How much back we have to go for matching as it is not bifurcated on GST and portal? So Payal, we have to say for doing reconciliation for 24-25, we can go till 23-24, like finding the opening balance. So once our opening balance is getting clear, then it is a yearly reconciliation. I will surely be sharing this Excel, Vikasji. Like I will be sharing to Komalji, and Komalji will be sharing this Excel to all the participants. So don't worry on that part. Okay. Yes, Prashantji was telling that yes, on portal it is getting updated in the April itself. So no worry, we can definitely say that in my books, as the invoice pertain in the month of March, I have taken credit in month of March. But on GSTN portal, as credit is coming in month of April, I am taking this credit in month of April. Due to this, there will be closing input rate difference in Tally as well as portal. So if we have the reason and justification, department will not disallow the credit. So, okay, next, let's move on to the fifth point. We have cleared 4 point right now. So moving to fifth point. So friends, in the fifth point, it says that, see, nowadays the department is very clear even on sales aspect. See, till now we were thinking that queries comes only in input credit. But friends, now in my clients and in many of the industry, the query is coming in sales part. So now question will comes that sales में क्या query आ सकती है? So what queries comes in sales? Department take the data from e-way bill portal. Department take the data from e-invoice portal. And what they say that you have generated 20 e-way bill, but in your sales, you have only 18 sales invoice. What is the reason of two e-way bill? But what actually happens that the accountant generate e-way bill, accountant generate e-invoice, and later on he comes to know that this sales is not to be done. So he simply delete the sales invoice and forget to delete e-way bill or e-invoice. So in that scenario, what happens? Department feels that we have wrongly executed those sales. So what is my request to all of you is that to solve this problem, see, always ensure that your sales, your e-way bill and e-invoice are going parallelly. In case there is a difference in this, there is fair chances that department will come with the list of e-way bill and invoice and will tell you that आपने e-way bill generate किया है, आपने e-invoice generate किया है, तो sales invoice क्या है? Or take a reverse scenario. You have generated a sales invoice, but you have forgotten to generate e-way bill or e-invoice. So it is very necessary for an auditor or for a company that in the month of March, take a list of entire year e-way bill, take a list of entire year e-invoice and compare with your sales data. Because see, in the earlier regime, like in the earlier period of GST, during 17, 18, 18, 19, we were doing mistake even in GSTR 1, GSTR 3B and sales. But now over a period of time, we have understood this and in most of the SSC, in 95% of SSC, 1, 3B and sales go parallelly. Like because people are generating GSTR 1, 3B directly from Tally. So data of the books is always matching with 1 and 3B. But now queries are coming in other aspect, like queries are coming in e-way bill and e-invoice. So I would request you to make a reconciliation of three of it, because see, if any transaction is lying in e-way bill or if any transaction is lying in e-invoice and it is not there in your sales data, then what department will feel? Department will ask you to pay GST on that sales, in spite of the fact that that is your not sales. So you need to first document the reason of cancellation. In many a time, what happens? You have generated sales invoice, you have generated e-way bill, you have generated invoice, and later on you cancel at all the places. Then department even asks the reason of cancellation. So it is very necessary that you need to document the reason at that point time only. Because see, today I remember the reason of cancellation, but after 2 years, if someone is asking me, I will not be knowing the reason. And if in during the year there are 40-50 cancellation of such invoices, there are chances that department will feel that we have done that sales through wrong channel. Okay. Yes, Payalji, your point is right. It cannot be cancelled, but yes, there are instances that people, what they do, they generate e-invoice, they generate e-way bill, and they delete the transaction from their GSTR1, from their GSTR3B, and even from their books of account. So many a time what happened, they wrongly generate those invoices. So it is very necessary that parallel effect is given, because today you forget to give the parallel effect, but later on in assessment department comes with the list and they ask you to pay the tax of that. So be very clear in this aspect. Have a reconciliation checklist for this e-way bill, invoice and sales. Now point number 7. Okay, so in point number 7, what I want to convey is that is RCM compliant or not? See, all of we us know that on this transaction RCM comes, but what happened that in the monthly data, the data which client is given, he has not posted certain expense, say security expense, say payment to advocate, and he is posting those invoices as a backdated transaction. So in the month of March, what is my practice? I will scrutinize the entire backup, and in entire backup, those transactions which are eligible for RCM, I compare with the actual RCM which is paid. And for all the differential transaction, I give the effect of RCM in the month of March. And reason behind this is that, see what happens in RCM, whatever we pay, we get the input credit. So there is no additional burden on SSC. It is simply payment and taking the credit. But what happen if I miss any RCM and later on, say after 1 year, 2 years, I come to know that I have missed this RCM? What will happen at that time? I need to pay that RCM with interest and penalty, and that interest penalty is direct loss to assessee. And more importantly, even the RCM tax amount paid by assessee is also direct loss, because see the timeline for claiming the input credit ends up today. If I comply this RCM in the month of March or up to the month of September, it is fine for me because I can anyway claim the input credit. I'm only on loss of interest part. But later on, after 2-3 years during assessment, if I pay this RCM, I have to pay 15% penalty as an additional amount. I have to pay huge interest, and even the amount which is paid as RCM will not be eligible as input credit. So friends, request you all to comply your entire year RCM. For any missed transaction, comply that in the month of March. Okay. There is one very nice question, Prakashji. I was coming to that part only. Yes, under RCM, it is necessary for assessee to generate self-invoice. And in the recent GST Council meeting, it is proposed that even though self-invoice number are to be updated within 30 days in the GSTR1. So basically, self-invoice for any RCM transaction has to be made within 30 days of that services, and it is mandatory to have the self invoice for all the RCM, all the services which are subject to RCM. Now, next question, next point, point number 8. What it says that, is there any income? See, what happens that we take their income from bank statement, we take their income from all the sales invoices which are there. But many a time, what happens, income comes directly in 26 years, like commission income, certain additional income, certain professional fee income. That income even the client don't know, and it might be coming in his saving account or in some wife account or like that. But see what GST law says, that in case you have taken the GSTN number, all your incomes which are coming in your name are subject to tax. So in the month of March, you need to validate the other income of assessee also. Like if any other income is coming and which is subject to tax, it is necessary that you pay GST on that. See, for example, client is running the business of goods and he is having some separate commercial property which he has given on rent, and the rent income is coming in his saving account. So even though rent income is coming in his saving account, as he is having GSTN number, the commercial property given on rent is subject to GST. So it is necessary to pay GST on that. So at the year end, you need to find the other income and you need to check the GST implication on those other income. Okay, there is one question. Just a moment. LIC commission is taxable or not? So that Ramakumarji, we need to check from the law point whether it is taxable or not. Then second is Prashant Kumarji, whether it is suggested to review. So this 25 points you can review in the month of March to give the effect in the month of March 3B. And in case March may nahi hua, do it till the month of September so that you can give the effect of any changes by September. So it is basically for the compliance for year ending 24-25. Is RCM also to be paid by the service receiver in case transport service if the same is discharged by? No, if the transport company has discharged, you don't need to pay. Okay, done. So moving further, let's move to point number 9. Sales analysis percentage wise breakup of output liability company. So friends, what happens whenever we do any year-end reconciliation, there are many a time chances that company is having multiple rate product, 5%, 12%, 18%. In that case, it is necessary to compare the total output liability of tax with the relevant sales amount. And we need to compare with like a ratio analysis. Like my sales amount is say 1 crore, and it pertains to 5% slab. The 5% slab cut tax amount should be 5 lakh. Same way the sales pertaining to 12% is say 50 lakhs, then the tax pertaining to that should be 6 lakh. So we need to do the ratio analysis for the tax with the sales amount. Okay, so Mehulji, in case of self-invoicing, suppose there you have missed certain RCM invoices, you can report it in the next month. But yes, reporting is mandatory. Like this month I have generated, I have forgot to report, I can report it in next. Now, next thing, supply of services free of cost to branch located in other state, non-availment of ITC in case of FOC. So see what happens that I have a branch in another state and I'm rendering services from this state to another state. Say for example, I'm having GST registration in Maharashtra as well, and I have one GST in Gujarat as well. So what happens? If any services are going free of cost to Maharashtra registration, I need to pro rata reverse the input credit of those things. So anything which is going free of cost, even the free supplies to customers, I need to reverse the pro rata input credit because the input credit pertaining to free supply is not eligible. So in case your client is giving anything as a free samples, you need to ask him to reverse the pro rata input rate. Now take another scenario that he has destroyed certain closing stocks. Then even on those closing stock, any input credit lying in those closing stock need to be reversed. Now next point. Okay, so friends, what you can do, you can put all Q&A in the question answer part. I'll take those question answer one by one at the end of this checklist. Okay. Now point number 11. Okay. So in point number 11, it is said that validate your HSN GST rate of goods and services. So friends, what happened? On the GSTN portal, we can only update top 5 HSN of the company. And many a time company has changes its business based on the fast moving item or like that. Whenever you change your key product, whenever there is a change in HSN, it is necessary that that HSN is been reported on your GSTN portal. So your top 5 moving items HSN should be there on GSTN portal. And secondly, many a time due to very thin line of difference, there is a change in HSN GST rate. Like you say, see the chocolates. So confectionery chocolates are having the GST rate of 12%, but confectionery chocolates with caramelized is having a GST rate of 18%. Same is the case of recent case of popcorn. If it is a sada popcorn, it is 5%. If it is a caramelized popcorn, it is 18%. So there is a change in HSN by a very thin line, like only last number to get changed. So in that scenario, I would request that you should always assure your GSTN rate with the HSN which you are marking in invoice. Many time you feel that no, my HSN is having this rate only, but due to very small change in HSN, there can be change in rate. So be careful in that part. You can check for this year. Now moving to the 12th point. Okay, there is one question from Idris Mansoori ji. Buy one get one is not considered as FOC. It is told as 50% discount, or it is told as allocation of one amount between two. So, for example, I'm selling one item for 100. I'm selling another item as free. It will be told as 50 rupees item first and 50 rupees item as second. Okay, now moving to second, is effect of yearly inter-head setup RCM GST entries given in Tally or not? So what happens many a time the books balance is differing from the portal balance. The reason being is that the accountant has not posted the set of entries. Accountant has not posted RCM entries. Accountant has forgotten to post the GST refund entries. So in the year end, you should first check whether this adjustment entries are posted or not. If not posted, post it correctly. Now, point number 13. Now, in case you have any canteen expense in your books of account, ensure that you have paid tax under forward charge or not. Because see, earlier canteen expense was not having any GST applicability. But after various judgment, the department has came up with clarity that if any company is giving a canteen services to their employees, that company need to discharge the GST on that. Earlier, the notice pay was taxable, but now notice pay GST has been removed. In case there is any GST assessment during the year, we need to give the impact of that in our books of accounts. Moving to point number 14, this is very crucial and most of the assessee don't know about this. This is a game changer point. Like in all the assessment department, they focus, this is on this point only. So what this point says that for all your input credits, it is necessary that payment for those invoices should be done in 180 days. If you're not making payment within 180 days, you need to compulsory reverse those input credits. So what happens? Department are coming with the notices for 18, 19, 19, 20 and telling that you have not made payment to creditor within 180 days. So now you have to reverse that input credit along with interest and penalty. Department is telling that this is wrong ITC claim. Now, if you say that I have made the payment, but payment is made after 180 days. So what law says that at 180 days, if payment is not made, reverse that credit. And whenever you are making payment, reclaim that credit. So what department will do for a balance period, for differential period, it will ask you to pay the interest. And in many scenario, what happens if the timeline of reclaiming the credit has gone, department will end up reversing the credit as well as making you will ask you to make the payment of interest and penalty. So what is a very small request to use that? Tally has a facility of booking all the transaction bill to bill. So from the Tally itself, find the transaction which are not paid within 180 days, like which are paid after 180 days, and reverse the input credit for those transaction. And whenever you are making payment, again, reclaim those credit. But ensure to do this, otherwise you will end up reversing lots of credit and that too with interest penalty. For MSME, yes, for MSME it is 45 days, that's fine. But under GST, the law is saying 180 days. So if you are following the MSME rule, it's well and good. But if that is not followed for other parties other than MSME, ensure the 180 days compliance. Okay, 180 days is from bill date, Pramod. It's not from due date, from the bill date. Okay. Now point number 15. What it says that are all exports remittance received within 9 months. So in case you are exporting, ensure that your payment of forex is coming within 9 months. If it is not coming within 9 months, again it is violation of the FEMA Act, and if it is a violation of FEMA Act, it is a violation of basic condition of exports. And then department asks you to pay GST even on exports. So ensure that your foreign remittance is coming within 9 months. Now, point number 16, what it says that in case there are any written off of any expense, any creditor or debtor, it is necessary that we need to reverse the GST of that. So for creditor, what happens that creditor are basically our purchases. And in case we are reversing any creditor's amount, in case we are squaring of any creditor ledger, that means we are reducing our purchase amount. In that scenario, we need to reverse the input credit also. So many times what happens, in the year end, assessee simply square off the creditor. What he does, he simply write off the creditor amount and he forget to reverse the pro rata input credit pertaining to that. And what happens during assessment, department tells that आपने creditor write off किया है तो आपको इसकी input credit reverse करनी पड़ेगी. So better to reverse it right now rather than waiting it getting pointed out from the officer. Okay. Mandeep ji has a very good question. What about reversal of data? Can we reclaim the outputs? No, we cannot reclaim the output. But in case reversal of data is due to some sales return or due to discounts or sort of, yes, if there is an official credit debit notes pertaining to that, you can reclaim the credits. But if there is no credit debit note pertaining to that, you cannot reclaim. Okay, moving further. Is any foreign payments. So in case you are making any foreign payments, like if you're making any sort of foreign payments to outside India through credit card or through Amazon web server, or you're buying any Zoho, ebook, Zoom, any foreign payments, any outside India, you need to compulsory comply RCM on that. So that qualify as OIDR services, outside India services. So any for any OIDR services, you need to compulsory pay RCM on that and you can reclaim that credit. So many times assessee don't know that with this services also falls in RCM. So today would like to clarify to all of you that for any payment outside India, first check that whether that service is consumed in India. If that service is consumed in India, it is very much necessary to pay RCM on that and take the input credit. So for any OIDR services, if in case your client is swiping his credit card for buying online theme, Amazon web server, Zoho, ebook, Zoom, etc., you need to compulsory comply with RCM on that. Moving further. Okay, point number 19, ITC on prepaid expense. So many a time what happens, certain expenses are done in month of March, but the benefit of those expense will be enjoyed in the coming year. Like you are paying the lease line for entire year in month of March, and the major expense of those lease lines in pertain in the year of 25-26. In that case, the proportionate ITC also should be claimed in next year, because what law says, the ITC should be enjoyed in the month when relevant expense of that ITC is done. So, though you have made the advance payment for those lease line, though invoice pertain to month of March, as the enjoyment of that ITC, the benefit of that ITC will be there in next month. Like lease line will be enjoyed in the coming year. You need to pro rata reverse the input credit in current year and reclaim it in next year. Now moving on to point number 20. Okay. Point number 20, it says, uh, is any insurance, food, car, construction, food, goods, damages, etc. So friends, what it says, it says that in case you have any block credit in your books of accounts. So see, as per section 17, subsection 5, in case you have any block credit, it need to be reversed. So in the month of March, what you need to do, you need to see entire your profit and loss expense account, and in that profit and loss expense account you need to see that in case I have taken any sort of input credit for say food, for insurance, for construction, for car, for medical, rent a cab, etc., I need to reverse those input credit, because as per section 17 subsection 5, these are block credit and cannot be claimed as ITC. So this is a checklist checkpoint in the month of March to ensure that whether any block credit is not been wrongly taken. Now there is one question. It says that ITC on prepaid expense, there will be difference in 2B and 3B as the year will be different. Yes, there will be difference, but Pramodji, we need to mention this point in our checklist as a reconciling point, that difference is due to prepaid items. Now moving to point number 21, what it says. Okay. It says that is rent a cab, advocate, renting of commercial property from URD. So see, the under this budget, it is even said that if I being a company take any commercial property from unregistered person, I am required to pay RCM under reverse charge. So I need to even ensure that for any rent paid by me, if that rent is paid for a commercial property and that too from unregistered, I need to pay RCM. And even rent from for a residential property used for commercial purpose, I need to pay tax under RCM. So any payment to directors also, I need to ensure the RCM compliance. So for the director, what is the rule? Rule says that any amount paid to director other than employer-employer relationship, like payment in form of uh, in form of director sitting fee, or in form of technical fee, in form of service fee, I need to pay. I need to comply RCM for payments to director other than amount given as salary to director. So this is also a checklist point for any payment to directors, for any payment for commercial rent, etc. Okay, there is question from Jaya Lakshmi. No, director loans doesn't come to RCM because loan is a financial transaction. It is not having relevance with the P&L. Okay. There is a question from Madan Singh ji. If input on raw material on building allowable or not. So Madan ji, recently there is a very landmark case came of Safari retreat of Supreme Court. So under Safari retreat, Supreme Court allowed the input credit for raw material on building, stating building as a plant. But under recent budget, the government has quashed that judgment, saying that this judgment is not relevant, and government has made even the amendment in law that any import credit pertaining to building will not be allowed, and they have changed the word in section 17 also. So though that judgment was favorable, though it was of Supreme Court, but now government has came with the amendment against the judgment, and in that context, import credit of raw material in context to building is not eligible. Only and only if you are having business of construction and that building is for sales, then only it is allowed. Okay, now if that building budget has nullified the Safari case judgment. Now Prakash ji is telling that if that building is a part of plant and machine, a P&L. Yes, there is one viewpoint that if that building is not capitalized and if it is a small wear and tear expense and it is routed through P&L, yes, many of them are taking the credit. Even I am of the view that if that small expense are not capitalized and routed through books P&L, then input credit can be taken, because the wording of section 17 subsection 5 says that if it is capitalized in books of account, if it is routed through P&L, you can take the credit, provided that expense should be of revenue nature and not in capital nature. So you need to justify that yes, my expense is of revenue nature. Okay, great. Many of the doubts have been cleared. Moving to the last question, it is okay. Prepaid, whether to be claimed month-wise in the next year or in the March 26. Venkatesh ji, the ideal practice is it should be claimed month-wise. You can pro rata allocate the entire lease line expense in the entire year, dividing by 12, and reclaim month-wise, and have a backend working for that for assessment purpose. Like you can note those points in your checklist. Now moving further, point number 22. Just a moment. Okay, there is one more question from Pramodji. As an auditor, we need to be careful whether, yes, we need to be very careful whether it is a capital expense or revenue expense. Because say, today you take the credit considering it as a revenue expense, but later on department deny with the fact that it is a revenue expense, he will disallow with the input credit. So ensure with the condition of capitalization. Now moving to the point number 22, what it says. So it says that in case of exempt income, sale of land, closing stock damage, sales of mutual fund, whether ITC is reversed or not. So many of you would be shocked with this fact that sale of land में ITC reversal कहाँ से आया और sale of mutual fund में ITC reversal कहाँ से आया. So what law says that in case in my books of account is having any of this transaction like sale of mutual fund, sale of land, it is mandatory for me to reverse the common credit as per the formula. So, though land is an exempt supply, mutual fund is an exempt supply, I need to reverse pro rata the common credit. So, जो भी आपके business की common credit है, for example, auditor fee, payment of lease line, payment of telephone, payment regarding repair, payment regarding maintenance, this all are common credits. So, take that common credit figure and pro rata reverse that input credit pertaining to sales of land, sales of mutual fund, etc. And that input credit you need to reverse. So generally होता क्या है during assessment, officer simply sees that the assessee has done sale of land. Then he asks the question that have you done the reversal of common credit? And at that time we say that we have missed out. So at that time we end up paying interest penalty. So my request to all of you is that during year, if you have done any of this, simply reverse the pro rata credit. The amount would be very nominal because there are formula for that. Like say for sale of mutual fund, it is deemed that only 1% value of mutual funds is treated as supply. So against that 1% value only, you need to reverse the common credit, and that comes to a very nominal amount. So we'll take again the question. Uh, even if Jayesh will surely share the presentation, like presentation, Excel, everything will be shared to you from the Tally team. Okay. Now question would from the Venkatesh Ji is like, prepaid expense, if it is claimed after October 25, will it be time barred? No, it will not be time barred. What you need to do, you have to claim entire prepaid credit in the month of March. आप पूरी credit इसी साल में ले लो. And under reversal tab, you reverse the credit of remaining 11 month and then reclaim it month by month. See, there is no statutory timeline for reclaiming. Once आपने timely ले ली, फिर आपने law के हिसाब से reverse की और फिर reclaim कर रहे हो, कोई issue नहीं. Because many a time prepaid expense runs over 5 years. Like किसी ने 5 साल का combo pack ले लिया and today they are making the payment. So what he will do, he will take entire 5 years input credit in the month of March. He will prorate a reverse 4 years credit in the month of March only under the tab of reversal. So that will be a clear cut disclosure कि मैंने पूरे 5 साल की क्रेडिट लिए 4 साल की रिवर्स करो and then in the spread of 4 years he will be reclaiming that credit. So that time there will not be any issue. Okay, there is one question from Vandana ji. Even if you have a separate books of account, still we have to reverse common credit. So question comes that having a separate books of account doesn't mean that your business are separate. If it is under one GSTN, yes, common credit reversal comes. And believe me, it is coming very nominal amount, but compliance is very necessary because after 2-3 years with the accumulation of interest penalty, it becomes a big amount. So take this reversal in month of March itself and get it done. Like pick your common credits, apply the formula and reverse it. Okay. There is one question from host. Yes, sale of land is not a supply 100% right. But under section 17, if you see the rules of input credit under GST law, for sale of land also reversal of input credit, reversal of common credit is there. Okay, I can share the Excel in chat itself. I'll share it. Done. Okay, friends, I've shared the Excel in the chat itself. You all can take this Excel. Okay, moving further.
Yeah, Sonal ji, actually the Excel even I have not received in the chat, in the
Okay, fine.
attachment. Yeah.
I'll rather mail you. I've tried to
Yeah,
upload
yeah.
to computer
You
service. It is
can
not.
email me, I'll send it. Yeah.
Okay. Now question is coming from Venkatesh ji that only in books we have to reverse and not in 3B. No, no. We have to reverse in 3B itself. Like under 3B, there are common points of reversal. Like 3B made, there are two parts under input credit. One is claiming part and second is reversal part. So claim it and reverse it in the bottom. So there will be a clear cut disclosure that I have claimed entire credit. I have reversed it proportionately, and I'm reclaiming it during the month which is pertaining to that. Okay, moving further. So friends, moving further, we are done with point 22. We are still having 3 points. Then we'll move to the tally part. So point number 23, say GST on sale of used car, machinery, etc. So friends, this is also very interesting point. Earlier, what was there? Earlier, this is again the recent budget amendment, like recent GST council meeting amendment. Earlier, for any sale of used car, the GST rate was 12% of profit margin. But now department has said that for any profit margins for sale of used car, you need to pay the GST of 18%. And many of them what happened that as this sale of car and machinery are routed from balance sheet, it is not coming in P&L. We forget to do GST compliance on that. So my request to all of you is that for any of your client or you yourself, in case you have sold any of the car or machinery during the year, ensure that the GST has been complied for those sales. So for you to not to forget this point, I have mentioned this point in checklist itself. Now moving to point number 24. Prakash ji, yes, as per law, prepaid ITC should be claimed in next year, should be claimed in the month which is pertaining to that. Because see, today no one is going to see that, but in case if you feel that there are chances of assessment in my company, whenever the department see the expense invoice, in that invoice itself, the period would be mentioned. And if that period pertain to the next period, then what will department will do? Department will ask you to pay the interest. Because see, this import credit was eligible in next year, but you are enjoying the benefit of that in current year. So department will ask you paying the interest on that. So better to claim during the period which during which it actually pertains. There was one more question. Wait a moment. Okay. What if ITC claim on plant and machinery and depreciation also claim under income tax? There is no issue on that. See what law says that in case you are claiming the depreciation on plant and machinery, you need to claim the ITC. Claiming is not an issue on that. In case the machinery is subject to 28%, and if that person is selling it out, then yes, liability would be 28%, the slab in which it is falling off. Now moving to the point number 24. In case of exports with payment for goods, are all scroll based refund clear or not? This is again interesting, and many of you might be knowing also the concept of scroll based refund. So friends, what is the concept of scroll based refund? See, for exports with payment of tax, the refund comes automatically on clearance on the custom portal. So in case your assessee is doing export with payment, it is necessary for you to check that whether he has received the scroll based refund or not, and that has to be checked from the custom portal. That has to be checked from the custom portal. Like in case your assessee is having exports with payment of tax, it is very necessary for you to check whether he has received refund for those exports or not. So आपको ईयर एंड में पूरे साल के जितने विद पेमेंट ऑफ एक्सपोर्ट्स किए हैं वो चेक करने विद द शिपिंग बिल. So as long as the export invoices are not getting matched with the shipping bill, you will not be getting export with payment refund on those sales invoices. So in the month of March, validate all your export shipping bill with your sales invoices of exports and ensure that uska relevant refund आया कि नहीं. अगर refund नहीं आया है तो you have a time to correct those invoices in your GSTR 1, GSTR 3B. Because only and only if the details are matching with 3B and details are matching with your shipping bill, then only custom portal will process the refund. So this is a high time for you to validate your exports with your shipping bill and get the refund cleared. Clear to all of you? Now moving to the last point of checklist, then we'll be moving to the tally part. Meanwhile, I'm taking the one last question. Uh, Okay, if GST capitalized on plant and machinery, okay, if you have capitalized the GST, then you cannot claim the input credit. It is very necessary that you capitalize plant and machinery only with the basic amount. The plant and machinery is of 1 crore and GST is of say 18 lakh. अगर आपने plant and machinery को 1 crore से book किया है तो ही आप 18 lakh की credit ले सकते हो. If you are booking the plant and machinery with 1 crore 18 lakh and claiming depreciation on that 1 crore 18 lakh, you cannot claim the input credit of GST in that case. Now, just a minute. Just a minute. Okay, coming to the last point, purchase invoice scrutiny, manually vouch certain invoice. Yes, in the year end, you can manually validate certain purchase invoices because now even department are coming with the query whether the purchase invoice are signed or not, whether purchase invoice are having address, HSN or properly or not. So you can on a random basis, you can validate your purchase invoices, you can scrutinize that because see, if your input credit gets disallowed, it is a very huge impact on assessee. So ensure that all your input credit are valid in terms of section 16. So this was all about 25 point checklist and I hope it will be very much useful for all of you in the year end compliance. Now moving on to the tally part. So friends, now moving on to the practical aspect of the session. Okay. So under tally, I'll be covering 5 major aspects. Excel, the Komalji will be sharing Excel. I have tried to share here, but it is not getting.
Did you, if your WhatsApp is on, if you can send over WhatsApp, I'll just immediately send it over
Just
the chat.
I'm sending you on WhatsApp. Just a minute.
Yeah.
Komalji, I have emailed you. You can share to participants.
Okay, noted. I'll send it.
So now, Komalji, is the presentation screen visible to all of you?
Yeah, the content page is visible.
Done, done. So friends, now moving on to the practical aspect of tally. Uh, See, till now we learned about all theoretical aspect like which are the points to be taken care for year-end compliance. Now, how Tally will be useful for making this year-end compliance easier. So, I found out certain points in Tally 5.1 which will make your work easier in context to year-end compliance. The first point is like, see, auditing through Tally is a very detailed topic, but I will just give you a glance that from which tab you can do auditing through Tally. So we'll have a walkthrough in Tally. Second is identifying the risk amount in Tally means identifying the amount of credit for each creditor ledger in Tally. Then discovering the dashboard in Tally, identifying the streep feature of Tally, which is a new feature of Tally 5.1, and auto ledger creation from through GST and in Tally 5.1. So switching on to the Tally screen. So I hope Tally screen is visible to all of you.
Yes.
So just let me take one last question related to earlier period, earlier points. What if plant and machinery used for partly business and partly personal use? Then yes, you cannot claim full credit. You can claim only proportional credit. Okay. Now moving to the practical aspect. The first thing is that from where you can do auditing through Tally. So for auditing through Tally, it is display more report. There is a last tab that is analysis and verification. So again, I'm showing we are at gateway of Tally. Here there is a point called display more report. Simply click that display more report. Simply click display more report. And there is one last tab called analysis and verification. Click on analysis verification. There are 2 points called data analysis and voucher verification. So under data analysis, see, in the audit, we used to learn 2 concepts called compliance procedure and substantive procedure. So data analysis is a part of compliance procedure and voucher verification is part of substantive procedure. So simply I'm going to data analysis. So here you can see that I can verify the charts of accounts in Tally. I can verify the closing stock item in Tally, verification of balances, analytical procedure. So first I'm going to charts of accounts. So friends, you can see that Tally has segregated all my ledgers into 5 parts. Accounts squared off during the year, not used during the year, not used in current year, only balances. So being an auditor, it becomes very easy for me to do ledger scrutiny. So see, for that ledger having only balances, I can simply enter and I can see that these are the ledger having only balances. So say for electric deposit, I have a doubt that whether still it exists or not. So I can simply enter here. I can say on hold and I need a confirmation from electric department. As an auditor, I need a confirmation from electric department. So I can simply mention that comment. So once I mention that comment, that this becomes part of my audit program. Again, say for rent advance, I feel that I need to mention a query. I can simply mention the query. I can mention that whether it is squared off or not. Say for a GST balance, I have confirmed it, then I can simply verify it. Land building, I feel that it is verified, I can simply verify it. See, now what happens, whatever query I have mentioned, this query is coming in this program itself. And I can simply export this document under Excel and I can give to client for query solving. So see how my ledger scrutiny work has become so simpler. I have done my audit in Tally itself. Like जो green tick manually कर रहे वो Tally में ही होगी. My charts of accounts is getting verified in Tally itself. This you can do for each ledger. Same way for each category of ledger, I can see and I can mention the comment here itself. Verified, verified. This is how you can do your entire year-end audit. Once this is done for charts of account, you can do same for verification of stock items. For stock item, also in the same way I can do the audit. Okay. Now, say I want to audit this, verify. Say for this, I have a query that why it is going, why stock going negative. I can mention this query here itself. So this query is coming here. This way I can even validate entire stock. Same way verification of balance. So I can validate my closing balance, opening balance from here itself. I can even compare company like agar I want to verify the balances, I can compare the company. If I am having the last year data, I can compare it and validate the opening balance itself. See, there is a point of compare company. So you can simply select the path of last year data and Tally will automatically match the opening balance. The opening balance work which we are doing manually, it can be done automatically through Tally. Then analytical procedure. This is about ratio analysis. Many times we want to do ratio analysis. Say, I want to compare the salary expense with the sales expense. So it will show me the ratio of salary with sales. So this is how I can do ratio analysis of any sort of expense, group wise, ledger group, cost center, anything. Then there is a relative size factor, like Tally itself is identifying certain ledger which are high risk ledger. So it is easy for me to scrutinize those ledger. So this is how you can do your compliance procedure from Tally, like verification of charts of account, verification of opening balance, stock item. Now moving on to the transaction analysis. Voucher verification. So here, this is very interesting. Under this tab, Tally gives me the list of entire year transactions. So it is telling me that there are 642 transactions in a year. From that, how many you want to sample it. So I can simply click here and do the sampling. So say for the sales, I want to do sampling. Tally will ask me that which method you want to select for sampling. So I am doing say sampling configuration. It is asking me which method. So see, Tally itself do the sampling. Here I can select any method. Say I'm doing Benford analysis, which is a scientific method. So Tally will do sampling based on that. So Tally has selected 8 voucher as sample. I can simply go to this voucher and say this transaction is proper, and I can simply do audit. This transaction is also proper. I can simply do audit. Green tick I am doing in the Tally itself. So for this transaction, I have a doubt. So I need external clarification, need support document. For this transaction, I need e-way bill. So this is how I can export these queries right from here and give to the client for solving the queries. Same way for each category, like for each set of transaction, I can do sampling. So here also for receipt, Tally has given me sampling and I can do manually auditing. This is how you can do all transaction audits from Tally itself. Same way for stock order, sales, payment, purchase. The purchase I want to do sampling, simply click on sampling configuration. Tally has selected the sample. This is how you can do verification. So friends, I would request you all to try your hands in Tally and do auditing through Tally this time. You'll enjoy doing the audit through Tally. Okay, Dhairyaji, yes, audit. You can select any sort of sampling method from here. Like based on your choice, you can select the sample. And there are n number of method of sample selection, like sampling configuration. So you can select any of the method of your choice, even number, odd number, amount, range, specific period. Now moving on to the next part. This was about how to do auditing through Tally. Now, what I wanted to show is identifying the risk amount. So this feature is about 5.1, which many of you might be not knowing. So moving to, let's open any of the creator ledger. This is my creator say. And I'm opening it with bill wise. So this is bill wise. So see, here Tally is asking me, there is one more feature which is there in Tally, show ITC at risk and balance amount. Control. So see friends, you can see there is one new concept, like in this transaction GST is not booked correctly, but see Tally is now coming up with the concept of GST outstanding. So what it will be telling you, that it will be telling that for this party your GST amount is this much and basic amount is this much. So whenever you are making payment to creditor, I would request you to do bill wise in this manner, so that you can identify that this much tax amount I have to keep on hold. You have to just pay the basic amount. Now moving to the next part. See friends, currently we see daybook in this manner, but Tally has came up with one new concept called strip view. So that strip view, for that you have to click F1. You have to click on setting. You have to click on display. So here under display, there is an option called enable strip view for reports. I'm simply making it yes. Control A. Now you can see the daybook is coming with strip, like it is very easy to identify the transaction. Can you see the stripes in the invoices? So this feature I would request you all to enjoy, making your view of Tally more simpler and faster. Same way, even for sales invoice, the strip view is there. Like, see, in the invoice also strip view is there. And even in ledger, right? See, at all level, the stripe view is there. See, even in ledger also strip view is there. So you can enjoy, try this new feature of Tally. Yes, Pravin's GST return can definitely be filed in through Tally. That we have already taken in our last week session. Like Komalji, you can share you the link of same. Like today's session was more about year-end compliance. Now moving on to the next part. This is about dashboard. So friends, many of you have not might have not yet tried the dashboard feature of Tally, which is very interesting and very useful for management purpose. Like in case you are presenting any reports to all your client. Uh, okay, let me just take one question. How you selected sampling method? So I'll show you once again how I selected sampling method. And there is one question from Venkatesh ji. Is random sampling available? Then yes, random sampling is not available. Uh, but based on your own choice, you can select the sample. That's fine. You can do based on your choice. It's not necessary to mandatory select the method. You can even do audit of entire data. Bhargav ji, yes, strip can be available in printing also. In the printing, there is an option. You want printing with strip or without strip? I'll show you manually. Wait out. let's move to the tally part, like how it is available. See, here there is an option. Someone asked na, whether strip will come in printing or not. So if you mention it yes, then it will come. If you mention it no, it will not come in print. So in print configuration, there is an option whether you want strip in prints or you don't want strips in print. There is one more question: how I selected sampling. So again, I'm moving to dashboard. I'm moving to display, analysis and verification, voucher verification. Under analysis and verification, voucher verification, simply going to verification of voucher. And see, madam, I just need to select that thing. And there is one option on right hand side, sampling configuration. So simply click sample configuration and select the sampling method. This is how sample is selected. You can select any sort of method. And this is how the sample gets selected. So moving to the last part of session, that is dashboard. So friends, many of you might have already tried this dashboard. If not tried, try this very interesting feature of Tally. So where you will find this feature, simply go to Gateway of Tally. There is one last option above below above quit, that is dashboard. Simply click on dashboard. No, Pravinji, sample cannot be compared with last year. You can simply see last year data under compare company option, but sample cannot be compared with last year. For that, you need to open last year backup and see what you have selected as sample. Now under dashboard, you can see that it is a by default management report generated by Tally, and there are 11 tiles at a time. So see, dashboard is more like a business intelligence. Tally itself is fetching the report from backend and generating the charts and graphs and varigraph. So simply, you can see that it has derived the sales trend, purchase trend, and you can drill down also. See, I'm open entering sales trend. So it is showing me all sales transaction. And if I want to say add tile, I can add any sort of tile, gross profit trend. And you can see that gross profit trend tile has kept. If you want to expand tiles, then Tally will expand the tile. See, you can see the tile in a detail that this is how the fluctuation is going on. If you want to change view, like I want to change view of this inventory, I want vertical. So this is how vertical it will come in. I want to say configure tile. Then it will ask me that these are the configuration for tile: accounting ratio, show working capital of company, show inventory, show current ratio, quick ratio, operating, 9 position. So this is how the tile get expanded. That working capital ratio is this, current ratio is this, date is this, return of investment is this. I can even change the period of tile. Say for this, I want to configure the tile. So I can configure it. See, even I can see change the graph method. Graph, data in graph, graph I want bar wise. So see, the first tile has been changed. Now it is showing me first month wise data, and it is showing me below entire bar graph. I can expand this tile. I can even change the period. So friends, I would request you to try a hands-on training on this Tally dashboard and derive the data for management. This is year ending. Extract the data in the graphical format and make your report more interesting and attractive. Any questions other than this? Yes, we can. Yes, we can print this tile also, Prashantji, and we can share to client. So thank you for this like wonderful opportunity of session. I hope I was just done justice to the topic given. Any question? Komalji, any question?
Yeah, so that's what. So I just put in the question that how was today's session. So as you could see, the compliments pouring in. So it was a highly engaging session, Sonalji. So I'm sure
Thank
that
you.
was very useful. And the Excel sheet, I'm sure, would be very useful during the month of March with the closing. So great. So I think I need not conclude. I think everybody is thanking you on behalf of Tally. So thank you so much for this very highly engaging session. We'll make sure that the recording is ready and we'll be uploading in our YouTube channel. And if you're already part of our CA community, please do put in a request in the group. I'll share it with our group admin so that they can send the same to you. So thank you so much.